Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, March 17th, 2020. And I want to go over the few things that we're watching, at least talking about the active trades and unofficial trades right now. So QQQ posted some charts this morning with some levels on QQQ and NQ, as well as SPY. As I said in the latest video yesterday, I kind of morphed throughout the day to first closing out the QQQ trade, deciding to close it out early instead of allowing it to continue to run for the time being. And basically, I put the odds at either a pretty sharp bounce or a continued downside at roughly equal. And in evaluating trades, both before I take a trade as well as during a trade, when I'm in an active trade, I'm constantly evaluating the risk-reward profile of that trade. In other words, I don't take or establish a new trade if it doesn't have an attractive risk-reward profile. I don't like to risk $1 to make $1. I like to risk $1 to make $3 or $4. And likewise, when you're in a trade, particularly in times like this when these markets and we have potentially explosive short covering rallies, again, the risk of giving back gains on that trade just wasn't worth the downside potential. As I went over in the video yesterday, and the end of day video especially, that's when I stated, look, here's the 11 sectors in the S&P 500, most are at or near support, and again, so the odds for a bounce were likely, and here we are, we're up about 7% so far. So it wasn't enough evidence, as I said this morning, for me to make that an official trade, but I got the charts out to you and the levels to watch, and that's what I want to go over today and take a look at what's happened and where we may be going. Let's keep it pretty simple. You could see on those charts this morning, you had these were 30-minute charts that I shared on QQQ and SPY. We had positive or bullish divergence here on the 30-minute time frame, and that's pretty much it. And as I said in that post this morning, whether or not we took a marginal, took another thrust down, this is what I expected, and so that actually I think helped. That red candle this morning. You might think I'm crazy, but when you get that break of the lows, you get more shorts piling in, and no offense to anybody here, because I swear I've been in this category myself, but it's what I refer to as weak-handed longs getting flushed out, meaning anybody that bought yesterday, or maybe even bought at the open, when that little flush post-opening right there happened. That was the 4 o'clock candle here. This is what I'm referring to here, this little drop here. This is a 1-minute chart. There's the open right here. This shaded area, that's pre-market if you can make it out. So we had this little pop there. So I'm talking about these people that bought on this. We came down and made a thrust down to run at yesterday's lows right there. You can see on QQQ right at about yesterday's lows. And these are wonky pre-market candles. Here's the shaded area if you're not sure what you're looking at. This is a 1-minute chart I flipped to on QQQ. And so this entire shaded area right here is both the post-market trading session right here up to this point after the closing bell at 4 p.m. and then the pre-market session this morning. And then this is what happened. That's that flush out move I was talking about this morning. And so far a healthy reversal. Now look, we're not out of the woods yet. The fundamental outlook and landscape for the economy has not changed. It's still pretty dire what's going on there with a lot of businesses being shut down. So to be very clear, and I said this yesterday and I made it in the comment section as well as in some of the videos, but just to reiterate it, there's the big difference between my short-term outlook for the market or any particular security at any time and my intermediate or longer-term outlook. So I am still expecting more downside, longer-term, intermediate-term bearish on the market. I don't think coronavirus goes away tomorrow. I think the world will adapt and adjust to it, and then maybe hopefully one day we get a cure here. But until then, just the repercussions that this has, I think it's clearly, well, only time will tell if we're in a recession, but I think it's safe to say that this has triggered a recession in the economy. But the way recessions officially happen is they're declared in hindsight. You get a recession is defined as 2 consecutive negative quarters or contracting quarters of GDP. So if you have, it's going to take again, 6 months, and that's even after the quarterly numbers are reported. So we can kind of figure what's going on with the stock market and with the economy. And again, it doesn't take an astute economist to tell you this is probably going to push into a recession. Now, the thing is, how big of one will it be? Just a minor recession caused by this setback in the coronavirus, or will it be deeper? Only time will tell. I'm not going to even waste my breath talking about that now. We'll let the long-term charts be our guide, but they do indicate to me that this was, the stock market's been pricing in a major top for a long time, big long-standing divergences. But let's take it one day at a time. We'll see how this month ends, how the monthly trend indicators look at that time, how the long-term trend lines and everything else look. Let's just talk about today, tomorrow, next week, because as I said, even if you're not an active trader, even if my flip-flopping, going long to short, being bullish to bearish is driving you crazy. What I continue to say is swing trading, or even to some degree trend trading, a bear market is like trading or investing in a bull market, but on fast forward, because the moves are so sharp. And again, this is nothing new. Sure, this drop has been one of the sharpest in years and even decades. But we've had some meltdown periods in 2008 that were even worse. And what I'm trying to say here is, these moves, even though they're only a week or so, several days, 16%, 17 on that initial drop, turn around 10, 11%, and then turn around from there, which we did. We were long a good part of that, the bulk of that move. We were short a good part of this on the way down. And now, although unofficially, I said yesterday I went long, and I added to those longs today. I like what I saw, and so that's it. I'm swinging up here. Forget about all this. That's the daily chart. Let's go back here. 30-minute chart is where I gave you targets, and so you can see there so far. As I'm doing the video, and it can all change, it looks good because we had a nice reversal and we've taken out R1. That means first resistance level, or resistance 1, about 179.13 on QQQ. Now we have a pretty significant level, and I would put very good odds at a reaction here. That is an intersecting resistance levels of about 185.46-ish, we'll call it 185.50, as well as that downtrend line off the highs right here. Let's clean that up, tighten it up a little bit here. I don't know why. Sometimes they drift. I call it trend line drift on this charting program here, TC2000. That's where that trend line should be. It should be on the top of this candle here if you want to replicate it. I highly suggest use log scaling. If you don't use log scaling on your charts, you may get a different fit on trend lines and things like that. So that's the March 4th highs, the March 10th high, and then this high right here from Friday, March 13th. And so now we zoom in. So again, it depends on where it comes in. That's why I put an asterisk here. I never finished typing after I added that asterisk. Let me do it right now. That means T1 is first of the... Well, you know what? I'm not even going to finish typing that now, because what I was going to say is I moved it out. I was going to say the first of the trend line or that level to be hit, but they're both in close proximity. In fact, the trend line, again, it depends on where, if and when we even get there, where that level is going to come in. What I'm trying to say is, you can ramp up quickly, or we could zigzag like this for a while and then hit it here, and then you have intersecting trend line and price support. So it all depends on if and when we get there, whether we're going to hit this price support level first, or possibly even come down here and hit the trend line down the road here, where it actually then comes in below there. So that's kind of why I had that there. I was just wanted to make mention that they're both resistance levels, and so you want to respect a tag of either or those levels. This is a big one, about 185.46. So again, if you're looking just to gain a quick profit, get in and out. Never trust a bear market rally. They're beautiful to trade, but you don't want to be stay too late to the party. It's like a game of musical chairs. When the music stops playing, you don't want to be the last one standing without a chair, because this thing will go back down. But either way, there's a big old gap right there, and that was remember that trading range I talked about, and we had that one pop right there, right into resistance. So these are pretty clear levels to me, and the way it works is if the market can power up through 185.50-ish with conviction, you might get a little pop ahead of time. Again, I think the odds are good for a reaction there if you want to book profits. Especially if we get there now and we're very overbought when we do so. If we consolidate before we get there, we might have built up the energy to kind of punch on through there. So that's it. I'm going to leave it here and just say that's my minimum target. That's why hence T1. That's why I didn't call this T1. I called it R1, even though we were down here earlier, because I didn't plan to take any profits. I was more waiting to see that level go as an additional buy signal or confirmation that we're going to go up to that first and minimum target. And again, trend line likely to come into play as well. So we'll just have to see where it is when we get there. And there's T2. It's that's simple. Whether it works out that well or not, we'll see. Again, some more trend line drift going on here. Let's fit it properly on SPY. I don't know if it was in the charts that way. If it was, just take a look here. Look at those same reaction highs that I pointed out on QQQ. Nice clean trend line. There it is. SPY is actually struggling right now as I do the video a little bit. It's slightly above, but call it 250, 50-ish resistance. And then pretty clear level that's comparable to that level on QQQ. The Qs might get there first, but that's 260.92. Maybe a little bit under that, a little bit below it, give or take. Again, volatile market. Don't try to, these levels aren't going to always hold to the penny. Sometimes you do get a reversal right there. So that's it. That's the next target, and you can see those come in pretty closely together. Again, depends on when we get there. If we can continue to power up, the S&P is lagging the tech-heavy QQQ, as I said recently. From a fundamental perspective, think about it. QQQ is about 50% technology stocks. Their business model is going to be less impacted than the blue chips of the S&P 500, travel and leisure companies and things like that you're probably going to find a higher weighting in the S&P than the NASDAQ 100. But with that being said, the more we can push away from this 250-51 level, the more it increases the odds we're going to come on up there to that first and minimum target right there of about 260.90 or so, maybe a little under that. If you want to hold out, there's a lot of ways to trade it. You can take the quick profits, expect to pull back, recycle in if you're an active trader, or if you're a swing trader, just trail stops up every so often. You're going to have to use wide stops. There'll be a pullback somewhere probably. Right now the machines are buying. They're in buy mode. And, if we keep walking up, you can raise your stops. And we might punch right on through there. And if we do, 273.57 is still very much a possibility. And if we get there, I may be adding, I'll see where the markets are, but I may be, almost certainly be closing out my longs if we get all the way up there. And quite likely adding back another short trade on QQQ or maybe SPY this time around. We'll see. All right. What else I want to show you? NQ. Showed you the NASDAQ 100 futures. That's not it. There it is right there. And that's it. So you can see now from NQ, we have nice and clean, 3 distinct successful defenses of that support level there, a little bit above 6,900. What I have this is the Fibonacci retracement level. I put those up this morning on that chart I shared with you. And you can see I have T1 as price resistance around 75.57 or so, 75.58, but there's also a Fibonacci retracement level there. And I measured from the highs in the market to the lows in this recent drop. And so that would be a minimum. That's really the minimum fib retracement level there. T2, I have price resistance there at about 78.15, 78.16 with these reactions here, and that's pretty much it. But you also have the trend line overhead, and so the trend lines will come in before that T2 level. So I wanted to make that clear. We'll probably see a reaction. I would put very good odds of that they'll step in and sell the initial tag of that trend line. So that's going to come in right around the T1 area, a little bit above it, and then from there, who knows? Maybe we power straight on through. It's certainly possible. Maybe that's the end of the rally. If we get there, that's certainly possible as well. This is kind of my cone of uncertainty in here, if you will. I feel pretty confident we'll go up to that first target there, and targets, the odds go down of each target getting hit. And just to be very clear, that's the final target. I wouldn't be looking for any more than that. It's certainly possible. And again, if you want to trail it up, but I can tell you this right now, if and when we get to these second or third targets, this market's going to feel very bullish. Headlines are going to come out pretty bullish in the news to follow. I always say headlines follow the charts. They follow the fundamentals. You can be in a rip-roaring bull trend. Headlines are rosy. All of a sudden, the market corrects, and the media doesn't know what the cause. If it was a technical, like a bearish rising wedge breakdown or some technical pattern, sure enough, they'll find a headline to slap on, and then the headlines start to get bearish. But all I'm trying to say is, don't unless something changes in the fundamental landscape, the only positive, and I did lay these positives out there recently, is you have world governments, global governments, not just the Fed, not just the U.S. government, world governments throwing everything they have at this market right now to stem the effects of what coronavirus is going to do to the economy and the stock market. So that's powerful stuff. We'll see what trillions of dollars of liquidity injected to the system will do. It can certainly cause a very powerful and sharp near-term rally, shorts cover and everything else. So like I said, I love trading bear market rallies. These are the levels to watch, but as I said, just don't fall in love with it, and trade it as you want. There's not one single way, but it's prudent at this point. If you went long this morning or anywhere along there, just periodically throughout the day ratchet it up. Oh, and by the way, the way technical analysis works is once resistance is broken, it becomes support. So R1 now is really S1, or support level 1. So on a pullback, that's where it would be an objective level to go long with a stop somewhat below. So if you're trailing this up, you could have a stop below there now. At some point, if we go on to take out the trend line, maybe we come in and back test it, so the trend line then becomes support, etc., etc. So those are the levels to watch and how to trade it. The other things that we are currently long is gold right now. Gold's up nice. This is GC gold futures. Let me get to the gold chart. I gave you GLD. This one we added yesterday as an active official long trade. And where did I put the targets on what time frame? Okay, that must be it. 60-minute chart. I thought so. I just had to find the right board. That's it. So there's that, that 136.37-ish level. Was the basis for going long, part of the basis, down to support. And so here we have, and it doesn't surprise me. And again, this was thought through in advance, that gold is rallying and the stock market is rallying. Gold is, you might be perplexed a little. Hey, this is a flight to safety asset. Why is it rallying? Well, remember, it got sold down recently with the stock market, and I think a lot of people are thinking like me. Okay, we're looking at a bear market rally. So if there's going to be another leg down, what do you want to own? Well, gold is certainly part of what I like to own. At this point in time, and so it's a great time to buy it. It's been knocked down. Like any trade, it either works out or it doesn't work out. You can see we already hit the first and second price targets. I've been scrambling all day. If you're listening to this voice, you're one of the few people. There were a handful of people that started a subscription with the right side of the chart over the last few days. I had upgraded the website to a more powerful server, and had been with the same hosting company for many years. Been very happy with them, but they kind of dropped the ball during the migration from the previous server to the new server. So we're not bogging the site down as everybody's coming in. There was kind of a void there where we lost some of the post content, trading room stuff between, was it Saturday? I had the migration done over the weekend, but they didn't finally flip the switch until yesterday. So I sent an email to those. If you're listening to my voice, I'll try to get this out to you guys, that those that can't have access, they're working on it now. I have a developer working on this, and hopefully have a resolution on that real quick. I already talked about the email snafu last night. Just delete them. Go in, bulk delete all those emails that went out between 2 and 3 a.m. It wasn't spam. It wasn't some kind of hack. It was just the population when they tried to remigrate or overwrite, if you will, the website onto the new server. The software that sends out those emails recognized all the previous emails, at least going back till we finally figured out how to stop the flow of those emails going out. They got batched and queued and sent right out right away, and so it recognized those as new emails. So I'm again, sorry about that. Those are issues beyond my control, tech issues. I'm certainly giving my hosting company an earful. There was that divergent high on gold. Just want to say, so there's still the third target, and I may certainly allow this to morph into a longer term hold on gold, longer term trend. And finally, I wanted to address this one since we don't have many active trades. I'm trying to focus on just a few things here and get those right, make sure nothing slips through the cracks. So I'm hyper-focused on we're pretty much gaming the stock market. It's a lot easier for me to hyper-focus on the indexes, QQQ, SPY, and all that than trying to find stocks. When the time is right, when I have some time and the dust settles, I'll look for some nice long-term buys. I know there's people out there looking for dividend-paying stocks, but I'd rather look for those when I think we're poised for a much longer, potentially longer bounce. Maybe even the end is in the correction, the bear market, or at least a nice longer term bounce. Right now I'm looking for kind of a quick get in, get out. I expect the gains to be sharp today, possibly sharp tomorrow. Maybe we'll see. It all depends on how much we go up today. So it's hard for me to quantify in time how long these bounces will go on the market, but in price it's easier. And again, so if you have a big day of 8, 10, 6, 7, 8% gains, and maybe a second day of gains tomorrow, then the bounce could be over and it could be time to get short again that quick. All right, LQD. I've made quite a few comments yesterday under the homepage post. Hopefully those are not missing. Like I said, I'm finding a few bugs in the site from this migration. We're going to try to hammer that out, so please bear with us. Pardon our dust as far as the tech issues go. But LQD, I'm confident in this trade. Like any trade, it's either going to work out or not. But as I said in some of those comments, and I believe in the update yesterday, the long-term charts are broken. I think the wheels are in motion for what I had talked about. Downgrades that will continue. We'll continue to see downgrades on those lower BBB rated bonds, which are going to continue to put pressure on LQD as those bonds are being sold out. And also, just by downgrade, even while they still hold them, the price of a bond typically drops once its credit quality is downgraded. So again, it's both a technical and fundamental play. I don't see the fundamental situation improving for investment grade corporate bonds. And most importantly now, forget about all that. Maybe I'm wrong there, maybe I'm right. The technical read, maybe I'm wrong or right. But here's what I like about remaining short LQD, even while I'm expecting a bounce in the stock market, is that when the stock market rallies, you can see treasuries should be plummeting today, falling, as yields go up. When the stock market rallies, investment grade bonds and treasury bonds, which are also investment grade, but investment grade corporate bonds as well as treasuries, they typically go down in price. So the rally today in the stock market's having its toll on LQD. Even though you might think, well, doesn't that mean the risk of downgrades is a little bit less if the market's rallying? Maybe there's hopes that the worst is over. Of course, I don't think it is, but yeah. So again, that's being offset by the fact that interest rates today are going up, and that's going to put pressure on LQD and of course TLT. TLT is a risk-off asset, and you see the stock market rallying, so TLT is down about 2% today. All right, so let's wrap it up here, and that was it. Just wanted to go over those levels and kind of reiterate, don't stay too late to the party. Also know that the levels that I'm watching, a lot of other eyes are probably seeing those levels, and there's nothing wrong with taking a quick buck and stepping in early. If you really try to zero in, people might be looking at these previous reaction highs, and that's kind of where we stopped so far today. Once the tide turns, these momentum players, they're called Momo players. I'm one of them. Get in, get out, and try to get out before the rest of the herd. Like I said, it's really that simple. It's like a game of musical chairs. Music's playing, get in, engage. Big profits to be made on these, just the bounces. Even if you don't want to call it a bear market rally yet, it's still too early to call it that. Really, if you look at the charts, it's it's just the more of the same, up and down, big big price swings that we've seen along the way. There's potential for it to build into more, and I think it's going to be. I think we're looking at, again, I think there's pretty decent odds. I wouldn't have put the second target there, but like I said, this thing can reverse on a dime. So stay nimble. Keep your position size light if you're, stressed, worried, or stay out of the market. Really, if you're not sure what to do, or if a 5 or 7 or 10% swing for or against your position, if a 10% gain in your direction gets you all giddy inside, and a 10% drop makes you sick in the stomach, well, you're either have too large a position size, or this active trading thing isn't for you, because when the emotions kick in like that, it's just going to skew your judgment. You're going to stick with a profitable trade too long, give back profits because it's going well and you're happy. Likewise, when it goes against you, even though the bigger picture hasn't changed, and you start going under, down on that trade, you're probably going to pull the plug and panic at the exact worst time and see the market reverse. So like I said, if you want to get your feet wet and try this active trading stuff, then the key is just keep it small. You don't have to hit a home run or grand slam. Put a small amount, enough that you can, if it goes against you, you're not going to feel a lot of pain. And it doesn't take a very large position when the market's going up 8% a day to make a nice profit. Especially if we can get another 8 or 10% out of this before all said and done. Actually, we're looking at about 5.5 up to that second target if we get there, and the trend line's about 3%. So let me wrap it up here, guys. Get it out to you guys. And again, thank you for hanging in there with all these tech issues. Like I said, they couldn't have come at a worse time. Had I realized the changing the site to a new server would have caused such problems, I would have just held off and dealt with the sluggish, sometimes crashing site when a lot of traffic comes in during times like this. I would have waited till, I don't know what I could have done different. But all right, let me wrap it up here and get it out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.